Should you buy now or wait? Are you one of those home buyers sitting on the sidelines waiting for a massive housing crash to happen to bring house prices down? Are you sitting on the sidelines waiting for the housing market to drop to make housing more affordable? Well, over the last couple of weeks, we've seen interest rates rise, and at the same time, we've seen housing prices continue to climb. In fact, today, Goldman Sachs economists came out and said that they're expecting another 16% increase in home appreciation over the next year from 21 to 22. Now, we saw 18% year over year just this past month from August of 2020 to August of 2021. And now they're saying another 16% on top of that. So we're talking 34% increase in home prices in just 2 years. Well, that's what they're saying. And at the same time, we have this home price expectation survey where they interview 100 economists, real estate professionals, different people within the industry to get an idea of what they think is going to happen with regards to house prices. And they're expecting a 31.8% increase in home prices over the next 5 years. So if we see interest rates go up and home prices go up at the same time, what does that actually mean with regards to affordability? Well, we're going to take a look at those numbers today. We're going to leave this chart up on the screen so that we can get an idea of what we're talking about with regards to home prices and what it means if interest rates continue to climb. Now, I'm not putting out this video telling you that you need to buy a house. I'm just showing you what happens over the next couple of years if home prices do continue to climb and you see interest rates go up. What does affordability look like if you continue to see these increases? So earlier you heard me say that Goldman Sachs economists are expecting a 16% increase in home prices over the next year. So if you were to buy a $350,000 home today, that means in a year from now, assuming their expectations are somewhat accurate, that's a 56% increase in the value of your home, taking that $350,000 home to just over $400,000, $406,000. You could do the same math for a $700,000 home. That $700,000 home now gains $112,000 in equity, making it over an $800,000 home in just 1 year. Now, even as someone who has been pro-housing for the last 2 years, has talked about, housing prices going up and, the idea of a housing crash is just crazy. 16% even to me seems a bit crazy, right? I mean, that's a big, big number after seeing an 18% increase over the last year. And, if we continue to increase at the levels that we're expecting here, or that Goldman Sachs economists are expecting, it's not healthy for the market. So, what does it actually look like if we take the other survey that was done? The survey that I mentioned a moment ago, 100 economists, real estate professionals, etc., their numbers aren't quite as crazy, right? They're talking smaller numbers of appreciation, but they're talking about it increasing over the next 5 years. So we got a 31.8% increase in home prices over 5 years. But what if interest rates went from where they are today, say 3.25%, upwards of 4%? And let's just say they stayed at 4% over that 5-year period. Now, a lot of people believe that interest rates are going to go even higher than that. But if we're seeing house prices increase and we're seeing interest rates increase, what does that do to affordability? What does that actually look like on paper based on the numbers in this chart? Well, that's what we're going to take a look at right now. So if you were to get a mortgage today, a $350,000 mortgage today, and let's just say the interest rate was 3.25%. That's a fair interest rate. It's a reasonable interest rate based on today. You might be able to get a little bit lower than that. Depending on your credit, you might be slightly higher than that, but 3.25 is pretty fair. So at $350,000 today, that brings your payment to $1,523 per month. So $1,523 per month. But let's use this survey here and say that home prices increased by 12%, which is the numbers they're using here, to $391 in 2022. And let's just say at the same time, interest rates go up. So now you're financing $391 on that same property at 4%. Well, that takes your payment up to $1,866. Quite a difference there, right? Pretty big jump. But let's say you waited until the following year to purchase. Well, during that year, they're saying home prices are going to increase by another 6%, taking that number up to $413,000. Now, let's just say you finance that $413,000, and let's just say interest rates stay the same. They're at that 4%. They don't change from 2022 to 2023. That takes your mortgage payment up to $1,971 per month. So not only are the house prices getting more expensive, Interest rates are going up, which means that your monthly payment is also going up. But let's just say you wait, right? Waiting for that crash, waiting for housing prices to come back even further, and prices go up now to $430,000. That's another 6% increase year over year. Let's again say that you finance it at 4%. Now that payment is $2,052 per month, almost $500 more than what it would be to buy that house today at $350,000 at a 3.25% interest rate. But we're not done. They're expecting another 4% increase the following year, which takes that home price up to $445,000. So $445,000 at 4%, that takes your monthly payment to $2,124 a month. But hold on, we're not done. Based on this survey, they're expecting another 4% from 2025 to 2026, taking that purchase price of a $350,000 home, same home, now that same home is now $461,000. So it's gone up 31.8% over that 5-year period. And let's just say interest rates have stayed the same. Now let's finance that same property at 4%. Your payment is $2,200 a month. That's over $600 more per month than what it would be to buy that home today. Now, you might be one of those people out there that say, okay, well, that's going to happen, but at the end of that 5 years, home prices are going to reduce, or they're going to crash by at least 30% at that time. Okay, so let's use those numbers. So at $461,000, say prices drop by 30% in 5 years. That's $138,000 off that purchase price, which means that home is now worth $323,000. And you're thinking, see, Jeb, I told you, if I wait 5 years, I can buy that $350,000 home for $323,000. Now that's fair, but at the end of that 5-year period, you would have paid that $350,000 mortgage down to $304,000. Nearly $46,000 in principal you would have paid down by having a mortgage versus waiting. Now you might say, well, Jeb, I can just wait, and in 5 years, I would have gotten that house for $327,000. Yeah, you can have the argument a lot of different ways, but what we don't know in 5 years is where interest rates are. Are interest rates at 4%? Are they at 2%? The unknown, right? So if you're able to get a 30-year fixed today, you know exactly what the interest rate is. It's locked in. It's a fixed payment for 30 years. And if you believe inflation is real, then your rent payments are going to continue to rise over that 30-year period. Now, you might say, well, I'm going to end up buying a house at some point, so I'll have a fixed payment. That's fair, but where are interest rates going to be at that time? Are home prices actually going to decrease by 30% like we said in this? Or are they going to continue to rise for the foreseeable future? That's the part that you don't know. So, again, I'm not here to tell you to buy a house. I'm just here to tell you to think it through, right? You should buy a house when it's the right time of your life to purchase a property. Now, for each person, that's a little bit different. You should never be buying a house if you're stretching yourself, if you're borrowing money, from multiple parties to make it happen and you have no money in the bank. You shouldn't be buying a house. But if you've got money in the bank, the payment is affordable to you, it makes sense, you have job security, then it's something you should probably consider, because there's a really, really good chance that you're going to see home prices increase over the next couple of years. Now you might say, how can home prices continue to rise? How can they continue to go up? Well, as we've mentioned several times, it's based on supply and demand. There's not a lot of supply out there. And at the moment, you have supply constraint issues. Not only enough homes on the market at the moment, but they can't build them fast enough to make up the difference in what is actually needed. You've got first-time home buyers, millennials that are now prime buying age. They're making up a large pool of the home buyers in this market. And you might be saying, well, how can they afford to purchase property? How are they saving for the down payment? Well, a lot of them have lived at home a lot longer than we did as kids, right? A lot of them left college, went and moved back home, started putting money away. A lot of them have come out of college and actually had really good jobs. In addition, there's a lot of parents pulling money out of their property to give it to their kids to help them purchase property, because they see the direction that the housing market's going, and they want their children to be able to get in at a fair price, because they see that by waiting, it's likely going to cost more money. At the same time, you have the wealthy. The wealthy is putting their money in fixed assets, right? Real estate, it's a fixed asset, fixed payment. They know every single month if they rent that property out, what they're going to bring in. It's a hedge against inflation. So, you take all of that into consideration, And there's really no reason for home prices to decrease at this time. No real reason for supply to increase, right? Because a lot of property out there is being purchased by hedge funds, being purchased by, investors, because again, they see the return on investment, they see that fixed return over the next couple of years as inflation continues to creep up and affordability becomes a problem. People are going to need to rent. And therefore, owning rental property is a hedge against inflation and brings in that fixed amount of money every month. If you're at that point in your life where you're considering purchasing, make sure you run it through these numbers. Now, again, there's a lot of unknowns here, a lot of variables. We don't know that home prices are going to increase like this over the next 5 years. We don't know that interest rates are going to stay at 4%, right? They might come back down. They might go to 2.5%. Or maybe they go the other way. Maybe they go to 4.5%, right? Because the Fed has said as of 2023, they're going to start raising interest rates. And we know that they're likely going to start tapering their bond purchases as of November. So if they start to taper bond purchases, we don't know the interest rates are going to go up, but you're going to have some volatility in that market. So make sure you're weighing all these factors in. More importantly, make sure you're working with a professional on the mortgage side, on the real estate side. And if you need somebody, you don't have a referral or know anyone that can help guide you through that process, do me a favor, click that link in the description below. I'm happy to connect you with somebody who can guide you through the process and take great care of you. All I ask is that when going through the process that you have an open mind, consider all angles from it and make sure it's the right decision for you. As we start to wrap up today, I want to take a minute and ask a favor. If you found any value in this content at all, do me a favor, hit that thumbs up, share this content with anybody that you know that might be looking to purchase a home. My goal here is to help guide you through the process, make it simple and easy to understand. So I appreciate you watching. And do me a favor, if you're looking to get a mortgage right now and you're thinking about going through the process, you're hearing these advertisements online about super low interest rates, 1.75% interest rates or what have you, and you're wondering why you're not getting them when you're talking to your mortgage professional, check out this video here. I dive into it in more detail, help guide you through the process. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.